as conditions continue to worsen, those in the financial industry are becoming more desperate. Today we will discuss how the global economic collapse is drawing near. You came here for the truth, so let me unveil that for you. Now, how exactly do we tell that the global economic collapse is drawing near? We can see this from many different indicators. I'll get into today how we are repeating the same cycles. Look at this. This is a chart that I show regularly, and with the updated statistics, we can see that this death cross is continuing to get worse. The MSCI World Stocks, that's the green line, and at the bottom the red line, the World 2015 GDP growth expectations. So while we have stocks increasing generally, we have the actual growth, the GDP, going downward. And what's happening here is we're creating a chasm in between these two. They should be, in fact, increasing together, but that's not happening, hasn't been happening for quite some time. This is what worries me very much, because you need a solid footing, you need a foundation for anything, whether that's your knowledge, whether that's your investments, whether that's your nation or city or state or province. You need a solid foundation, and that is being completely overrun at the moment. I'll move on to this here, which is very important. We're talking about General Electric, or GE. They plan to sell off most of this finance arm in the next 2 years, redefining the multinational conglomerate. So what happened with GE? Well, we're talking about GE Capital specifically, and they had some issues. They'd like to take some risks, and it led them to the point where they entered the crisis. Rapidly shrinking the finance unit, GE Capital, one of the most powerful drivers of the firm's earnings, until it rocked the company after the fall of Lehman Brothers in 2008. There are situations in which companies take too much risk. Now, if you're a small business, you go bankrupt. If you're a big business, they have something else that's called too big to fail, and that means that you'll get a bailout. But in GE's case, in fact, they didn't even have to pay any tax. They said GE Capital did poorly, we lost so much money there, therefore we don't have to pay tax in our other areas. So they are able to make profits. They kept them overseas. However, now they have to bring those profits back. But many companies, this is just one example, keep their profits overseas, therefore not having to pay tax locally in their own nation. That's what's happening there. It was happening here with GE, except they're suggesting that they're going to bring their money back into the country and pay billions in taxes. We'll see if it actually happens. This is going to show you the situation that is worsening. Look at this here. Charles Lee. This individual is big in the Chinese financial industry, in the stock market. I would like to remind our friends in the mainland, don't be too anxious. You should be patient. Regulators are cautiously monitoring developments and will consider expanding the quotas at an appropriate time. Okay, so what exactly is going on with this? The reason I mention this is not necessarily to focus your attention on China. Definitely you should, because conditions are worsening there as well. However, what we're seeing is that before any crash, there is always the most amount of reassurance from the governments, from those in the private industries. Meanwhile, all of the smart money is pulling out. That's when you know the situation is actually really bad. It's when they're reassuring you that everything is okay. This is what I'm seeing now. We saw it in back in 1929. We saw it even throughout 2008. While everything was being terrible, they were going out and saying everything's fine, don't worry, don't panic, don't do anything, just keep your money, keep pouring it in. But that's not going to work. Look at this article here showing you a real indicator, and that is about Walgreens. They're announced closing 200 U.S. stores as part of its first earnings report since it merged with the European drug retailer. They are closing all of these stores, and apparently this is a cost-cutting initiative of $500 million. They want to reduce costs by $1.5 billion by the end of 2017. So they want to do this. They're not the only store. We've seen big box stores being closed rapidly, but why is this occurring? And it's simply because people do not have the same amount of money that they once did. They're becoming more frugal. They are basically debt strapped. So all of these stores that opened that perhaps were borderline, they are now finding their way closed. This is obviously going to put a bigger burden on the people when they are out of work. We have a situation that is worsening right now. It's not just the financial industry, but it is going all over the place. This is one example. Now, in my book, I remembered writing about this. In fact, the uncertainty during 2011 has brought on a wave of firings that washed away more than 200,000 jobs in the global financial services industry. Imagine that, 200,000 jobs in a short period of time, all because of the crisis that took place because big banks took bets. So when the big bank, or let's say the company, let's say GE for example, takes a big bet and they lose that bet, do they go and have to pay up out of their own pocket? No, they close a bunch of stores, they fire a whole bunch of people, they buy up their own shares if they need to, and they continue to get the stocks moving. They want corporate profits to increase, they want their stocks to increase as well, and they do so by any means necessary. And this is what happens. We see people getting fired all the time. Those people who were hired during this time of obviously of too much growth perhaps in the financial services industry, they never got their jobs back in many cases. So this is the real indicators we need to look at. This is out of CNBC. Financial advisors are saying the big part of their job is to educate new people, new clients on benefits of owning stocks. And this certified financial planner said this: once we explain that owning stocks in their accounts helps their portfolio stay ahead of inflation, most become more open to try. No one wants to run out of money. That's right. You really inject a little bit of fear into them. You don't want to run out of money when you turn 65 and need to retire. Look, invest in some stocks. They're going to do great. Look how great they've been doing since 2009. And of course, this is what they do. They give you the 5-year chart. You see it. It's continuously rising. They tell you, look, projected here is obviously another 5 years of growth. We had 5 years before, surely we'll have 5 years now, and this could very well occur. But is that a reason to take your money and put it into the stock market? Even Warren Buffett has said before that the stupidest reason to invest in a stock is because it's going up. This is what happens every single time in a crisis. You get the people who shouldn't have any involvement in the stock market pumping their money in, and they're always the last ones to get in, unfortunately. This is a connected article talking about housing debt being a major concern. You can see all the values here. Some financial experts are racing to retire mortgage-free. It isn't always the best strategy, even as the boomers try to lessen their financial burdens before they retire. So they're suggesting, look, don't pay off your debt. That's silly. What you need to do is invest in the stock market. Take some risk. Have a way for you to make some income while you retire. Sounds reasonable. Sounds okay. However, we know that they are taking extreme levels of risk doing this. The paper assets are very risky at this time. They could definitely be good. There are some good assets in paper, but not at the moment. It's too risky. I don't believe people should carry those. But sadly, individuals are going to stop paying down their debt. They believe that inflation or even a hyperinflation will erode some of their debt, and this is an extremely high risk scenario. I wanted to put these two articles here at the end, just a couple things that I wanted to mention. Number one is U.S. crude oil inventories are surging higher. In fact, if you look at what I read recently, is that Saudi Arabia is pumping more oil than ever. Look at the US, they're doing a similar thing here. Why? They have their inventories expanding. What this could mean is that they have less people buying, or perhaps that they're pumping, and it's just allowing the inventory to expand, and that means lower oil prices, at least in the short term. We don't know what's happening. Let's keep our eyes peeled on the oil situation. Remember, it is not over yet. This is one thing now, it's a few days old, so it's not so relevant, but I just wanted to mention it because we see it periodically, and it is quite a joke. 21 days, Treasury says debt has been frozen at this number here. We're looking at a situation of $18 trillion approximately, and it just sits at the exact same number for 3 weeks. It doesn't make a single ounce of sense that they spend not a single dime over a 3-week period. This has been going on now countless times. Every time they have a situation with a debt limit, they're always finding the debt doesn't increase at all over a period of time, and that allows them to buy them some time, essentially, until they get the situation fixed. The government statistics are completely fraudulent. Do you think an unemployment rate of less than 6% is accurate? This is extremely silly. Look at the real indicators. Look how many people are being laid off during the financial services industry. 200,000 people globally we saw laid off, but the unemployment rates look fine and dandy. Look at Walgreens shutting their stores. Look at all the other big box stores recently that have shut their doors, not just in the US, but in other countries as well. This is the real economy. If you found this video informative, please give me a thumbs up. I'd also like to invite you to check out an interview that I just did, and that's with Finance and Liberty. So you can check that out on my main channel page. If you scroll down, you'll see interviews with David Quintieri. You could check that out, as well as all my past interviews, all very relevant information. And check out the other playlists while you're there. I have ones about specific countries that I am always collecting information on. So remember, if you're from a particular country or want to see information about a particular country, just let me know, and I'm always willing to continue my deep analysis on particular countries and continue to collect the data on them. I'm paying particular attention, in fact, to Europe and certain regions within Europe, not just Greece, Italy, Spain, and the obvious ones. So definitely keeping my eyes on that and trying to collect more data. Last but not least, you do not want to forget to become an insider, because it's where I give out all my best intel for free, and that is available at themoneygps.com. And all you have to do is scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.